Welcome everyone to the Kendall Report. It is 9 p.m. Eastern Time, or a little bit after, and there is so much to talk about tonight. There's some crazy stuff going on. We saw a big reversal in the S&P yesterday after being up overnight. I mentioned in last night's show that I thought maybe we're getting the S&P overdone a bit overnight, and that appears to be what happened. Just want to give you a warning. I'm in the middle of a major rainstorm, and my UPS, my battery backups have kicked on twice in the last 20 minutes. So hopefully you guys don't lose me. So I'll do my best to keep this going. Hopefully they'll be able to pull us through any power outages. So most of everything is on a battery backup in here, so I don't lose conductivity. So anyway, on with the show. But yesterday, I've been talking a lot about the Russell. We need the leadership there. Well, it showed up big time today. We look at S&P down 0.28 after being higher early in the session. NASDAQ down 0.52. And then the Russell up 1.46%. Man, that is a big move. And I'll show you the spreads here in a little bit. And this is exactly what I said we need to happen. Even though I titled this video tonight, is the market about to roll over? There's a lot of mixed signals showing up right now. And I see some vulnerability here all of a sudden. It was kind of in hindsight, a dead cat bounce last week, and we stalled again. So we'll go into all the details here in a few minutes. And I see some of you commenting about the energy call. This thing is not done yet, okay? I'm going to bring up our platform tonight and show you an energy strategy. Just go through a couple really simple ETFs. It boggles my mind. I know I'm self-promoting here, but that why everybody doesn't have this platform on their desktop. And there's a number of things that we're trying to improve right now, which we're very close to, and I'm very excited about that. So, this whole thing with the energy is getting out of control. Those of you in the UK, I don't need to tell you anything. Between electricity and fuel shortages, things are getting kind of crazy there. We don't really have any of that stuff going on in the US, at least not here in the Southwest and Arizona, but we're definitely seeing things across the world that really starting to heat up this energy situation. So let's talk just a couple things about yesterday. I didn't even bring up what news is coming out tomorrow. There was so much going on in prepping for the show tonight. I just focused on these things. But yesterday we saw, energy up big, up 3.4, financials up 1.3, and those are going to be places that I believe you're going to want to continue to focus on the short term. I think we'll see this rotation. We saw the 10-year print up over 150, 151.7 today, so that was somewhat exciting, but I think it might have peaked out. We actually hit, if you have the market grid, we actually hit that was exactly the extreme. I'll show you here in a minute. But, we're just seeing all types of gyrations going on here from the standpoint of interest rates and that underlying tone of that inflation that everybody wants to say is transitory, especially the Fed. So speaking of the Fed, I think it's very interesting. Of course, there are two Fed presidents they're not resigning, by the way, they're retiring. So you could be in the Fed, violate the rules, even though say they're not violating rules. So if you're not violating, why are you leaving, right? So you got the Boston Fed, and you got Kaplan and Rosengren. They're out of there, but they're retiring. So this is typical government stuff. You can do some really nasty stuff, even in the banks going back to 08 and 9, right? Nobody went to jail over that. That was the big joke at the end of the Big Short, was everybody went to jail. Well, wait, no, they didn't. Nobody did. So this is I guess the contrast between the other side and the rest of us. Other thing going on here, debt ceiling got blown up a few hours ago. I've been talking about this for a number of days, and we're just continuing to see this craziness go on. So now it's the Republicans are holding Joe Biden hostage. I love how the news, I've already seen a couple news, CNBC's playing it up pretty big in Asia and stuff like that. So they're playing that up. I told you this is what's going to happen. They're going to draw some lines in the sand, and they're going to be willing to fight on this thing. So this is the war zone we're about to enter into. I always call her Nancy McNasty, so I'll be nice and call her Nancy tonight. And, she's trying to get the bill to the floor, where they've already missed one date. Now they're saying Thursday. And there's a couple things I want to go into this, because this is important to understand from the standpoint of how it's going to affect the markets. There's so much stuff going on. This infrastructure bill is interesting from the standpoint as, they're supposedly only going to raise taxes on people over 400,000. Well, they're talking about having you pay tax on unrealized profits in your IRA, in your retirement accounts. What the hell is that, right? That's not going to tax anybody under 400,000. Oh, yes, it will. This whole thing is really crazy, and I've told you before, taxes matter. And I've started in the markets in 1979, the end of Jimmy Carter, and coming into Reagan, and we went from the almost 60% tax rate down to the Reagan tax cuts, and that was when the bull market started in 1980, and a lot of stuff went on. So taxes do matter. The only Bill Clinton actually raised some taxes, but it was very moderate, and the places where he did it in his final tenure was pretty muted from that standpoint. What they are proposing here is a couple things, and I just want to run this down, because for me this is really important, and I'm assuming you're here to watch what my opinion is. And so let's talk a little bit about that. So I don't think this thing's going to get done this week. If they show up to vote on this in the House, then Nancy has the votes. If they don't show up, that means they don't have the votes. And the longer this thing goes, the more questionable the bill will be. And they're going to have to downsize it from the $3.5 trillion, maybe to 1.5, maybe to 1 trillion. So that's going to be a huge compromise, I think we're going to see. And the main thing to hope for is that they don't get a lot of these tax raises. There are roughly 40 tax increases proposed, and they keep saying it's only for people over 400,000. Well, no, it's not. When you start to dig in to the areas they're going to tax, it's going to affect virtually everybody, especially if you have IRAs and other types of things. It's interesting what's going on here. So more on this later. And this is really, you have to pay attention to these numbers, because right now, as I've told you, we have been operating on the 2017 tax changes, and that's still what's going on. That's still what's driving everything out there. But we're starting to see some of the effects of the inflation. We're starting to see some things stall, and that's going to be my theme as we go forward, what's going to actually stall in the economy, and that's going to be very big. So there's basically three bills in real terms. There's a $1.5 trillion bill, there is a $3.5 trillion, and then there's a House Budget Committee has a $4.3 trillion. And I don't know which of these or any of them they're going to be able to get through. So we'll have to watch and see how that plays out. Let me just make sure I've got everything under control here, and make sure. Yeah, so one last thing, and this is, listen, if I don't care who the president is, if it was Trump or whoever, or Biden, Biden's big lie is that these things are paid for. And right now, everything I've been able to find, most of the budget reconciliations, all they're doing, all these taxes are going to raise about $2 trillion. They're talking about 3.5 to 4 trillion. So I'm just doing some basic math, and the math does not add up at all. So I don't know where they're getting this money, more deficits, potentially more inflation. Who knows what we're really dealing with here? And that's what we have to pay attention to. And I'm centered on this because I think there's something that's going to be told here. And the reason why I put out the title for tonight's video is that, will the markets roll over? I think there's some vulnerability here, and I don't believe market participants are going to really like any kind of tax increases or changes in these laws. And so that's pretty much my rant for tonight. So let's go ahead and dig into some of the numbers that I'm seeing on our database, and we'll get into those things here as well. So let's go ahead and move over there. And there's a couple things I want to show you on this. So here's the numbers I want to show you. We did see some buying tonight, and I want to point out, and it makes sense to see some buying because I'm going to show you where the rotation is tonight. I usually don't go into this much depth. I try to keep these things fairly quick. This one's not going to be tonight. I apologize. There's just too much on my mind that I want to get out there and say. So right now we went from a 30. Let me look at yesterday's sheet. We went from the 30.56% bullish yesterday to 32.35 today. We saw 1,695 buy signals, 647 sell signals. So we had a positive rotation. You'll see here on these two lines here, I'll just highlight them so you can see this. These two lines is bullish and positive. That just tells you the ratio buy versus sell. So we definitely have on a short-term level, even though yesterday was kind of sloppy from the standpoint of the S&P and the NASDAQ, we're still seeing the rotation. But guess what? Where we're seeing the rotation is exactly where we should be seeing it. I'm going to show you something here in a minute with the financials and what's going on right now. And the energy sector, from a sector level, just came on 3 sessions ago on a short-term level. Transportation's been on for 20 days. That's okay. But what I'm going to, down at the bottom here, let me just go to this screen here so you can see this. Down at the bottom here, the financials just kicked in for tomorrow's opening. So we're starting to finally see exactly what's going on from that standpoint. So let's go ahead and let me just bring that up from, so you can see exactly what's going on here. So I'll have to do a couple clicks. Here we go. So here's the financial. I just want to go through this and show you a couple things. And so right now there's 602 symbols in the financials, but we see their buys on insurance for tomorrow, regional banks, and savings and loans. And I've been telling you folks that these, on the financial side, this is where you're going to want to look, is at these regional banks and a lot of these smaller entities. That's where the small cap rotation is going to come into play. And that's exactly what we're seeing. So we go to regional banks here, and what you're going to see here is that a lot of this stuff has been long already, but we start to break it down. I just want to show you down below. These are all positions that are already long. There's a lot of symbols. This is flat positions, and the very bottom here, these are all brand new trades for tomorrow. There are tons of these things to rotate into, and we're just seeing a lot of rotation on these financials, which is part of the small caps, which is where you want to be positioned. And this is already being identified here as well. So the same thing with this S&L savings, all this stuff. This is the same thing here. There's not as many on buy positions there, but there are buy positions coming in these financials. So when I talk about we had 1,695 symbols to buy, this is what I'm talking about, because what we're looking at is just a lot of rotation into these financials. So the other sector that we want to look at here is really going down and looking at the energy and rotation there as well. So if you look at energy, we've already been long this stuff. We're long all of the subgroups. We've been long. We're 75% of the symbols in our energy database are already long, and they've been long, and that's why I've been screaming about energy and everything that's going on, and including the move in the underlying and the crude oil and those type of things. So this is just going to be a continuing focus from that standpoint. So yeah, so we'll go through in a minute on the Russell rotation. I've been talking about that several days, and I believe it's starting to show its true face there. So I just want, there's one last thing I want to bring up. I'm going to go to our portfolio manager, and I have this thing called IS Oil. I built this strategy many, many years ago. And it's a long only strategy on the ETFs from the standpoint of what's just for ETFs. I'll show you what they are here. Just look at the open positions. The open positions here show you these were all bought on our weekly models back almost a year ago, 11/16, 12/21. And you see the returns, 72%, 86%. So this oil trade has been on and relevant for a while, and that's why I continue to harp about all of these symbols here, because when you start to look at some of the rotation here, this is just a XOP, the spider. You can bring up and see where it was out way over here. If you can see my cursor, it exited oil at this spider at 160. It bought it down here at $52. It's now 98, up 86. So it bought really nicely out of this base. And it looks to me there's a potential continuation and a next move up over 100 on this thing. So I just wanted to feature that tonight because this is, I think, really important to understand exactly what's going on with all of the rotation in the energy, as well as the financials. Those are the two areas that I've been focusing you folks on for a number of weeks now, and we're starting to see that rotation happen. And so that's substantial. So let's go ahead and we'll dig into our typical, we'll go through the S&P, and then we'll hit NASDAQ, and then we'll go through Russell, and I'll show you the spread and how the leadership is starting to take off. And I've been talking, I don't know, maybe 2 weeks, maybe 3 weeks about the Russell bottoming here and actually setting up a pattern that I think is going to actually start to move higher. So let's go ahead and take a look at some of this stuff here. So looking at the S&P, we're down 11 handles right now. And yesterday's action, I mentioned this in last night's video, is that we are looking at, we had a high of 44.72. The R2 was 44.78. So we printed up this as daily futures almost to the R2. We reversed from there. We went down to 25 low, and that was just below S1. So we got an R2 S1. We look at today. Let me put this up on the screen for you. We look at today. We're really getting very close to somewhat of a trigger. We got the 10-pair moving average at 44.17, S1 44.20, low right now 44.21. So we're pressing into that S1. If we get through that level, then there's a move down to 44.06. There's a number of risk of getting down to that level, because what will happen on the PPMs, they will start to roll over. PPM 2 is negative. PPM 1 is really flat. It's down 0.02. That's not really significant, and it's just staying below its second derivative right now. But we're starting to see this thing roll over just a little bit, and the risk is that maybe we do a retracement from that 4293 print that we had back week before last, I guess it was. Yeah. So I guess it was on Monday, last Monday, where we saw that big print. Now we're retracing here. There's going to be some key levels on this market, and I believe somewhere around 40. Let me go back to the 43.92, 43.80 is going to be extreme. That puts us in that range. But for today, look for a potential of an S2 R1. We printed 33, so we still have some possibilities, but the moving averages above this market are in a very vulnerable state. So let's go over to SPX just to set that up for the cash markets. So yesterday we printed up to 57 high, and 58 was the 40 period moving average. And we look at the market grid for yesterday, R1 was 66, so we didn't quite make R1. S2 was 44.32, so the cash has a bit different configuration just because of the trading time zones that we're dealing with. So this is definitely putting us at risk. That 10 period moving average 44.28, and we'll go to today and we look at the market grid for today. And the key level watch for would be 34 S1, S2 44.24, 44.51 is R1. So R1, S2 I'm going with for tomorrow, and the PPMs are attempting to roll over. So how we trade will be critical today from the standpoint if we can stay above those absolute levels that I just mentioned. So let's go ahead and move on to the NASDAQ. NASDAQ is trading below its averages. We're starting to see some acceleration on the downside. PPM 1.15 or 0.25 or lower is a downtrend. So we're close to entering into a downtrend. We just look at the market grid. Market grid suggests that the potential low here is S2, 1587. R1 is 45, 15,245. We also have 15,249 is that 10 period moving average. So it's starting to move down. It won't take much to roll this market, and we could see some weakness, relative weakness in the NASDAQ as we go forward. Let's take a look at the Russell, which has got a completely opposite pattern. Now, this is daily Russell, and we traded up above the RTX number. And the magic number I've been focusing on is that 2250 level. I'll show you on the weekly chart in a minute, but look at the PPMs on this chart. PPM 1, 2, and 3 all breaking out at the same time. This is a very bullish chart. So this rotation that we're seeing here this is a short-term view, but this is a very significant one. It doesn't mean that we're just going to go vertical here, but we're definitely going to be able to hold support levels here. We're definitely going to be able to keep the relative strength up substantially. Let's go to the weekly chart real quick, because this is the numbers I was talking about, 2250. We're not really seeing any big acceleration yet on the weekly. But we are seeing things starting to move up from a price level. And we've already printed, I mentioned this last night, we're almost there. R3, 2306, I said we might be able to get above the 23 handle, and that looks more likely at the moment. We'll see how things set up, but I think we're going to see on a relative basis this thing stay stronger. So let's go over to here. Let's go over to the Russell chart. This is what we've been talking for all the way back into August. We printed the low, but during September I said if we can hold this low in this spread, we're going to start to see this actually start to move higher. And you can see it's very close to breaking out. And I do expect to see this thing really start to move higher. Now I'm going to, this will give us a little more perspective here. This is the weekly pattern that's here. So we are seeing even the weekly starting to show some pretty good strength. Now I don't expect this to accelerate above where we got earlier this year. I don't see that happening, but I do see on a relative basis, I I expect that we will see the Russell stay more stable, even if there is some downtrend in the NASDAQ, that we're going to see this outperform regardless whether the market's going higher or lower. We'll just see the NASDAQ down 1 and the Russell maybe down 0.25 or something like that. So we're just not going to see that them follow each other. And I think on the upside, maybe we'll see more days like we saw today, which is pretty phenomenal, with the NASDAQ down 0.5 and the Russell up 1.4. Don't think that can continue, but anything's possible. I like the patterns on the Russell in general on a short term, on the daily, as well as on the weekly chart. So expect to see more of that. So let's move on for tonight. Since I've already been rolling on for about 30 minutes right now, what I want to do here is I want to go through a couple markets and then we'll call it quits. I'm not going to do any of the cryptos tonight. They're under pressure. I'd like to do them, but I just don't have the time. I've got a hard stop coming up. And so what we'll do is we'll go through the 10-year and the setup there, crude oil and gold, and we'll call it quits. I'll come back on. So let's go ahead and get through those markets. So the 10-year, I've been talking a lot about this. This is the weekly chart. We got up to 1.26 is R2. We got above R1, and the key levels on the downside now are going to be 141 to 138 will be your extremes on the downside. I do see this thing potentially turning back. Let me go to the daily. And as I mentioned in the opening comments, we printed up to just above the RTX. Yesterday, RTX 1.514. The high yesterday, 1.517, and it reversed off of that level. I suspect we will get some sideways in here and start to trade between at least 142 should be the bottom end of this thing. And I don't see us getting above this 151.7, which is basically 152. So I think we'll start to consolidate there. But the thing that's happening, looking at these PPMs on this chart, as you can see, they're all accelerating. PPM 1 as 1.19. So anything over 0.25 is bullish. PPM 2 is at 0.51 and PPM 3 0.47. And I remember talking about this when we were negative not that long ago, that if we just go back just a few weeks ago, all of these numbers were flat to slightly positive, and I've been talking about the acceleration. This shows up best when we look at the weekly chart, and the weekly chart is, if we go back to, remember that cycle low that I was talking about? Well, the PPM 1 was at a minus 1.03. It's now at a plus 150. That's a big number, and what that's telling us is the absolute extreme and downside now is 133, most likely looking at 139, 1.39 to 1.35 is going to be the bottom end of this yield. So I don't think we're going to get much pressure that will come from it's going to push these markets much lower from the standpoint of the NASDAQ is going to react to that. And I think some of these markets will stabilize. They're going to give us an opportunity maybe to pick up some of these financials and some of these other elements out there that I've been talking about for some time now. So hopefully you folks have been able to benefit and get in on that trade, because that was a good trade. And, you know, so let's go to the next market. We'll go through the crude, and crude is printing 75.41. That's just kind of insane. Let me go to the daily. I'll go full screen so you can get a good view of this. So we printed up to RXT yesterday. We printed up to the 75.49 was that number there. And looking at the RTX number, 75.65, so we printed 75, just above that. We closed back at 45, which is in between our RXT, or the extreme posted for yesterday, to R3. We look at today, we're starting to see a little bit of flatness here, and I think we'll flatten out for a couple sessions on the crude. But the big number underneath now is 72.76, but it's really a 73 handle now, around 73.10, 73.15's major support at that point. Once again, the PPMs I was just talking about on the daily basis are really accelerating as well. We're at 0.72, 0.47, and 0.684. So that is all we need to know. That angle of attack that I talk about all the time is well in play. And regardless whether we go sideways, we don't have to go straight up to keep this thing going. But I do believe the magic number on this will go over to the weekly again. What we'll see here is the magic number is going to be back here when we printed the 76.22, looks like the high. Yeah, 76.22 was the high on a weekly. That's going to be the challenge. And the way these PPMs are setting up here on the weeklies, this thing is just set up to be incredibly explosive. And I know I've talked a lot about the potential for $90 and all of that going, and probably $100 a barrel is really where we're heading. So let's go to gold. Gold's still struggling down here, but I think a lot of this has to do maybe with some activity in some of the Chinese markets and all the crazy crackdown that's going on there. But just looking at the gold daily, I've been talking about this. That flash crash low is 1677 is that magical number. I showed you the Fibonacci projection off the current pattern. The minimum is exactly 1677. So that's going to be the point that you'd have to watch, but that's a long ways from here. That's almost $70. My expectation is we should go sideways for another day or two. We'll see these PPMs start to firm up a little bit, and we'll be in position to start to at least move up and challenge some of these upward numbers. And we really need to get back above 1800 for this market to look any good at all. Let's go over to the weekly. That is the weekly we're looking at, sorry. Let's look back at the daily. And here's the pattern that we saw just the other day, that low printed down to 1737. That'll be your key, and then the 1677 number. So we're very close here to seeing these PPMs turn up. Like I said, a couple of days more sideways, we should be ready to go. So folks, that's going to do the video for tonight. We're about 35 minutes in, so that's pretty good that I got through a lot of this stuff. I really think we're coming. This is going to be an interesting week. You know, we had the Fed last week and all that stuff going on, and you know, there's just a lot of rhetoric around. And you know, I just think it's just in closing comment is I think it's interesting that you can be part of the Fed, have inside information, and trade and make money on that, and all you have to do is retire when you get in trouble. I'm not sure that would work out for all of us. I just think maybe there's hope But if you started to dig into any of these institutions across the board, you would find all kinds of nastiness if you could actually get someone to dig in and report on them. So anyway, folks, I am really close. I worked on it today, getting close to putting my podcast out on Substack. I'll be telling you folks about how to get to that, and I'm looking forward to that content to have a free voice. So anyway, thanks again as always for watching. I really appreciate it, and I will talk to you tomorrow night.